Welcome to The Explainer. Today, we're going to break down a really powerful momentum strategy that a lot of pro traders use to catch big market moves. Seriously, this could completely change how you look at your charts.
So let's dive right into that question. It sounds almost too simple, right? But the way these two specific lines, these exponential moving averages, interact with each other can give you incredibly clear signals for finding really high probability trades.
So here's the game plan. We'll start with the basics. What are EMAs? Then we'll jump into the core mechanic, the crossover signals. After that, I'm going to show you the advanced filters that really separate the amateurs from the pros. And finally, we'll cover how to avoid the most common traps before we wrap it all up.
Okay, first things first. Before we can build this strategy, we've got to understand the tools. Let's get a really solid handle on the two key indicators that are at the heart of this whole thing.
So what exactly is an EMA? Well, you might have heard of a simple moving average, which treats all price data equally. The EMA is different. It's smarter. It gives more weight to what's happening right now, making it react way faster to price changes. And for a momentum strategy, that speed is absolutely everything.
Now think of these two EMAs as a team. You've got the 9 EMA, our fast signal, in blue. It's the scout, the trigger, it reacts almost instantly. Then you have the 20 EMA in red. That's our trend anchor. It's the steady hand that shows us the underlying short-term trend and acts as a bouncing off point for price.
Okay, now let's get to the fun part, the core of the strategy. This is where we watch how these two lines dance together to create clear, actionable trading signals right on your chart.
The first signal we're looking for is the golden cross. This is a classic. It happens when our fast blue 9 EMA shoots up and crosses above the slower red 20 EMA. This is your sign that momentum is shifting and the buyers are starting to take control.
And this is so important. A signal isn't just the cross. A lot of traders get this wrong. For a good entry, you need discipline. You wait for the cross, you confirm it with a full candle closing above it, and only then do you enter when the price breaks that candle's high. This process is what saves you from getting faked out.
Now on the flip side, we've got the death cross. It's the exact opposite, the mirror image. This is when our fast 9 EMA dives down below the 20 EMA. It's a signal that momentum is shifting to the downside and the sellers are stepping in. For a bearish setup, same logic, just reversed. You're waiting for that cross down, a candle closed below, and an entry on the break of that candle's low. But check out that last point. This is a pro tip. Confirming the move with a big spike in trading volume, that gives the signal so much more power.
This table lays it all out nice and clean. Golden cross, 9 crosses above 20, you're thinking bullish. Death cross, 9 crosses below 20, you're looking for a bearish play. It's a beautifully simple summary of our two main signals.
I love this quote because it hits the nail on the head. Not all crossovers are created equal. If you just trade every single time these lines cross, that's a recipe for disaster. The real skill is in filtering for the good ones, which, hey, brings us to the pro-level stuff. All right, now we get into the secret sauce. Let's look at 4 key filters that pros use to boost their accuracy. This is how you learn to ignore the noise and find those A-plus setups while avoiding all those frustrating fakeouts.
So, our first pro-level filter, it's all about patience. It's about making the market prove itself to you before you put a single dollar on the line.
This is the 3-candle confirmation rule. So instead of jumping in right away, you wait. You want to see the market hold that new direction for 3 candles. This simple act of waiting lets you sidestep so many of those nasty reversals designed to trap impatient traders.
Okay, our second filter is a visual one. It's all about training your eyes to see the strength of the momentum right there on the chart. We call this the EMA fan-out, or my favorite, the rocket launch. You want to see those 2 EMA lines spreading apart, fanning out from each other. That widening gap is a beautiful visual sign of accelerating momentum. If the lines are just running side by side or pinching together, the trend is losing gas. And our third filter is all about timing your entry. It helps you understand that natural push and pull of the price as it moves with the trend.
Think of the 20 EMA like a center of gravity, a magnet. Price likes to stay near it. It'll stretch away, but it almost always snaps back. So if you see the price is shot way up, miles away from the 20 EMA, that's a risky entry. The best trades happen when the price is close, hugging the EMAs, coiled up for the next move.
And our final filter, this one might be the most critical. It's about confirming that the big players, the market itself, are backing the move with real conviction. Look,
Volume is the fuel that powers market moves. A crossover without a big pop in volume is like a car engine with no gas. It's just not going anywhere. You need to see that commitment from other traders, and a volume surge of at least 1.5 times the average, that's the confirmation you're looking for.
You know, knowing when to trade is one thing, but knowing when to just sit on your hands and protect your capital, that's what really separates the traders who last from those who don't.
Here is the #1 rule for staying safe. If your chart looks like tangled spaghetti, just stay away. When those 9 and 20 EMAs are all twisted up, flat, and messy, it means the market is going nowhere. This strategy is for trending markets. If you try to force it here, you're just going to get chopped to pieces.
All right, so let's wrap this all up. Let's boil it down to the most important things you absolutely have to remember when you go to apply this to your own trading.
This is the big one. The 9 and 20 EMA strategy is a compass. It's a fantastic tool for reading momentum and figuring out which way the market is heading. But it is not a crystal ball. It doesn't predict the future. It just helps you navigate the present with a much higher probability of success.
So, I'll leave you with this question. Now that you have the compass, how are you going to use these filters, the 3-candle rule, the fan out, the magnet effect, and that volume sync, to navigate your next trade? Start thinking of these rules not as just a checklist, but as a whole system for understanding what the market is telling you. Thanks for watching.